but markets are up. They like the fact that everything is passed in Washington. Everything's hunky dory, beautiful, nothing wrong. So let's give you our levels for 2021, and we'll go from there. Our pivot this morning is 3760, 3760. Support 53, 48, 43, 36, and 28. Resistance above at 66, 73, 80, 85, and 90. All right. Pivot 3760. Resistance on the upside at 66, 73, 80, 85. Support below at 53, 48, 43, 36, and 28. You can just, if anybody's new here, welcome. If you want to ask a question or have any comment, just make sure you put it in the chat box area. You don't have to raise your hand. You can just come on in, just join us, and ask your questions in the chat box area. That way, I am able to read it and answer you with any questions that you might have. That'll be the easiest way for us to do that. Sure, I can repeat the levels again. If somebody has them typed out, we can just put them up here in the chat box area. There they are. They're in the chat box area. For those of you who have maybe missed them verbally, if you bring up your chat box, they're right there. Pivot is 3760, support of 53, 48, 43, 36, and 28. Resistance on the upside at 66, 73, 80, 85, and 90. So market again, very content with the fact that Congress passed this bill. The president signed it, and now we're trying to see what is going to happen next. We have AstraZeneca coming out with another vaccine. We've got a few more on the horizon. So things are looking just a little bit better as far as what the market looks at. Sure. What we do here is we are trading mini S&Ps. We're looking for opportunities. We don't believe that the markets go straight up or straight down. Consequently, we're looking for the inflection points where the markets will give us a chance to bounce and look for rotations off of those levels we have, plus also price action opportunities. We basically are scalping the market. We're looking for about 2 to 3 points on our stops, as well as 2 to 3 points of our profit targets. Sometimes, obviously, when market conditions are correct and we are in at a nice level, we are able to take a little bit more than 2 or 3 points, depending on how many contracts you trade. Obviously, if you're only trading one contract, then you should take your profits when they are presented to you. If you're trading multiple contracts, it gives you more flexibility in trading and gives you more opportunity to scale out. You also try to scale in when you're trading more than one contract. So using the levels that we gave out, in addition to price action opportunities that occur once the market's paint some bars, gives us an opportunity to scalp the market and take advantage of these ebbs and flows. So that's what we're trying to do here. We keep the risk relatively low. 2 to 3 points is manageable. It gives you an opportunity to trade maybe on average, I would say 4 or 5 times during the course of a day. I said on average, sometimes it's more. Obviously, last week with the being between Christmas and New Year's, the opportunities were a lot less. So, but again, 4 to 5 trades during the course of the morning is not bad, and we focus more on the morning hours to give us the opportunities. We feel that they give us the opportunities are more concise. They trade well technically, and gives us a better opportunity to trade the market in those morning hours, as there's more traders trading during those times, and gives the market a cleaner bill of health. So we focus more on the morning hours, as that's what we're trying to do, and try to see what, and again, try to take advantage of ebbs and flows of the market. So the market comes down here to the 53 area, quickly streaming down here. Again, that first bar is always a little bit tenuous to trade, because once the market opens up, a lot of traders start trading in that 8:30 time slot, and whoever was waiting for volume to pick up starts trading at that moment in time, and this is when the S&P, the big S&P market usually opens up, so you get more volatility in the market at that given moment. And once that starts, the rest of the day follows through. So that first couple bars in the morning is a little bit more volatile than you would think. And so you have to be a little bit, as long as you know what's going on and you understand the risk, then you could take it, trade it accordingly. But that's what's happening here, is you're getting a little push here to the downside. Probably, I would say, a little profit taken given where we opened up. We're opened up here. Let me move this up. We were opened up a lot higher, and the market, just players are just probably taking some profits as the market opens up here. So we've come down here again. It's not holding too well. Again, you kind of use your what should I say? Your discretion in regards to how to get out of some trades. Sometimes it's easier when the market's kind of bounced exactly perfectly, doesn't give us too many opportunities to mess it up, and other times we have to work a trade. Maybe you have to get out of some for a little bit less than your stop, and that's what happens in this situation. Is the market kind of quickly drifted down here through the 53, and again, you keep your stops in no matter what, and that way it gives you an opportunity to take advantage of the next level when it comes up upon us, like it's coming up here against the 48. So it came back up to the 52 area again. Those are some of the things that the market does, where, okay, we kind of went through 53. It's not really holding. It's giving you a chance to get out of some, maybe at 52, instead of taking your 3 points or 2 points loss, and then quickly comes down here to the 48. And so again, the first couple of bars always more volatile than most of the rest of the day, depending on what's going on every day. We can't always say that it's always the case, but there's always more volatility in the first couple bars of the day. As you can see, that's what's happening right now, is we quickly drift down here to the 48 area. Again, just keep your stop in no matter what, and that gives you an opportunity to get out of the first level and then work the second level. And if you don't like the second level, get out of that one and then see what happens there. All right, let's see here. So again, doing the same thing it did at the 53 area, where it's not kind of holding, but giving you a chance to get out for a little less than your stop. And sometimes that's okay. Again, we expect and we like markets to kind of bounce off of our levels really quickly, or give us an opportunity anyway. As you can see here, over the first couple levels here, they kind of just slice through it like it's no big deal. And again, that's probably, as you can see here, from the way the market's trading over the first couple bars, usually the case when that happens, that there's more added volatility into the market, and you have to just kind of understand that. And you can see the bars here. You can retrace, and it almost has all the days, all the nights trading all in one, in 2 bars here, which happens all the time. And as long as we understand that and you trade it accordingly, you can keep your losses at a premium, at a minimum, and then just wait till the market gives us an opportunity where you are able to actually bounce off of one of our levels and give us a chance to make money. Could you have gotten short? It's tough to say that you could have gotten short anywhere at this point. What we like to do is, as far as our trading is concerned, we kind of let the market dictate and give us the opportunities. We're not just trying to guess as to, how to enter our trades. We try to focus in more on saying, all right, if the market is, we need the technical analysis to support our entry points, and consequently, we're always looking for reasons to trade. Right? We're trying to find reasons to trade technically, and consequently, we need a reason to trade versus just saying, "Oh, the market's going down. We're just going to sell it because that's what's happening." It doesn't work that way. So we have to be a little bit patient here and let the market kind of dictate where our entry points are going to be. And we always talk about having reasons to trade. And once we find the reasons to trade, it gives you more confidence in entering those trades and then putting them on and then trading around them. So we're kind of drifting down here. 43 levels, the next support level that we have. Obviously, there's no support right now. The market's kind of just a little bit of a tailwind here, as again they opened up. A lot of traders overnight coming in here over the long weekend, especially some of who were not even probably haven't traded for a couple of weeks, are coming in here as the volume is increased a little bit, and they're creating some volatility, which is good to see. So nothing wrong with that, because the volatility also gives you opportunity, and that's where we're at right now. We kind of drifted down to the 44 area. We were looking at 43, next support level. Again, we're still in the first two bars, and some of our traders don't even like to trade the first two bars. You're welcome there, Sal. Not a big deal. I'm glad you're asking questions, especially some of the new folks that are in here. That's what we are here to do. We're actually an education group, and also in regards to, in addition to, I should say, a trading room. Trading room during the day, education in the afternoon. That's what we kind of try to do here. We focus more on the morning hours. Like I said earlier, we get more volatility in the morning hours. The ebbs and flows are there. The volume is there. And the opportunities are there in relation to the afternoon trade, where it becomes a little bit more sticky and less volume. Again, not every day. That's not always the case, but a lot of times. So we focus more on the morning hours. Gives us good opportunity there for market to give us a chance to make a little bit of money as we swiftly come down here to the 43 area. And again, just keep your stop in no matter how you trade. And that way you feel a little bit more confidence in the ability to put on your trades. There are blue bands coming in there at 41. So we're trying to see here if 43 area works. Again, if somebody could have told me or told you that the market was going to open up and drift down about 10, 15 points, you should have let me know. I would have loved to take that trade. But we don't know, and sometimes we can only do what the market tells us. And that's what we are doing right now. Unfortunately right now, being able to trade and minimize our losses as quickly as we can, because the market has just got this one-way trade thing going now. Again, the blue band came in there at 41.5. Do you have extreme levels beyond the highs and lows? Yeah, I do have other levels, if that's what you're asking me, above and below. And obviously, if the markets have been trading in tighter ranges, so I haven't given levels out beyond the ones I've given out, but I can give you a lot more levels than that. That's for sure. So yeah, so we do have them, and I will add some more since we're drifting down here a little bit. I guess I could add some more when the market kind of settles down. If not, if it keeps going down, I'll give them to you now. But yes, I do have more levels. I don't know. I don't know if that's always the case there, Peter. I just think that, you know, I don't even look at it that way. And I know some people do with the increased volatility and stuff like that, but I don't even. I just, trade whatever is here. But, we will find out why the market's nervous. We're always the second ones to find out. All right, Steve. Happy New Year to you. Welcome. Nice trade. I wish it could all be so easy, right? We're trying to bounce here off of our 43 area just a little bit. So I've been kind of talking through our why I would get out as far as our trade. You saw how it kind of slipped through to 53 kind of very easily and came back and kind of hung around to 52. So I suggested maybe get out for less than 2 points because it couldn't get above that. Did the same thing with the 48 level. Kind of drifted down to 48, kind of bounced there, couldn't get out, wasn't giving us any rotation. And so again, I was suggesting, getting out for maybe a little bit less or 2 points for sure. Now the 43 here, at least this one is giving us a nice better rotation. I did not suggest getting out. And consequently, we're getting a little bit of a bounce here. We also have a backup level underneath it, which was our blue band there at 41. So I kind of like this area a little bit. Probably the strongest one out of all of them. But I don't trade. I'm not giving levels telling you that one's stronger than the other because I'm not. That's not what we do here. If I give you a level, I believe that it should work. It has its own reasons that they should work. But some have multiple reasons, and the 43 here had multiple reasons. And so the more reasons that you trade gives you more confidence, so on and so forth. And that's why I never said anything about maybe bailing out here at the 43 because I thought that it gives us a bit of a chance here to bounce. Again, there was a couple other multiple reasons to trade. So I was talking to you if you were listening in regards to getting out of the longs. And again, I have the stops in there as well in case it runs on me, so I try to minimize that risk. And then again, if you just, keeping it to about 2 to 3 points with the hand stop, that did go down to 41, touched it and then bounced right back up to the 43. That's the one that I would have probably just hung in there with. I never told you to get out of that one. So it's kind of listen to what I'm saying, kind of helps us with our entries and exits. Well, obviously the entries are obvious. The levels were obvious, but some other price action opportunities that occur are there, and those will those are a little bit, you gotta maybe listen to those a little bit more. So well, again, yes, do I have larger levels for bigger time frames? Yes, you definitely have. You can. It all again. What your goals are. Everybody's goals are a little bit different when they're trading, and we try to, fit your trading style to what we're doing. If you were looking for longer time, well, I wouldn't say longer time frames, but maybe bigger stops or bigger bigger goals. What your goals are, what your stops are, so on. So, so if you're looking for 20, 30 point moves or 10, 15 point moves, yeah, I mean, we definitely could, your entry points would be a little bit different. It all depends on what you're looking for and then trying to find those opportune levels that you can get in on a level and then try to trade them around it. Obviously, if you were trying to get long here, right, I would say this, that if you were trying to get long and you're looking for bigger time frames, which are not usually, time frames are not really the question. It's how much what your goals are for how many points you're trying to get out of a trade, right? So I mean, you can, when we were trading in March and you were getting bars that were 30-point moves, I don't think you're really worried about time frames at that point. You were trying to catch something for 10, 15, 20 points, right? That's what you're kind of trading against. I don't think you're trying to hold it all day and watching the thing move around like 100 points at a time and during the course of the day. I don't know. I'm just thinking out loud because I don't know you. But I would assume that's what you're talking about. So if that was the case, right, and you wanted to get long, right, you would probably want to scale in, and 10 points or something like that is not really something that's going to prohibit you from getting out of a trade. So in that situation, maybe you're scaling in and getting long, just as an example, if that's what you were trying to do against the levels that we're talking about here. So again, different ways of entering, different opportunities. Maybe you scale in differently. If you're looking to get long and we have our levels, maybe you're trying to scale in against them, especially since the levels are tight here. 5 points, they do get a little bit more volatile when the markets are whipping around a little bit, where our points, our levels maybe are a little bit expanded, right? Again, everybody's different, so I'm just answering your question generally. I'm not, I don't know you, and I don't know what your goals are. But again, I think time frame, not so much so as it is the volatility and how much volume, how many points you're trying to achieve in every trade. What is the price? Yeah, the Bollinger Bands do give us, to try to keep us on the right side of the market. How about that? That would probably be the best. So if you're looking for, you have the 5-minute Bollinger Band and the hourly Bollinger Band, and they both giving you, one's telling you to sell, the other one's got a little support here against the 41. So you get contrasting, indicators, but we use the Bollinger Band to keep us on the right side of the market. That's where we're basically using our Bollinger Bands. What price action do you need to verify one of your price levels? Well, previous levels do come back into play. Previous value areas come back into play. Previous support and resistance levels come back into play. So there's a combination of things that we look at for us to give us more confidence in a level. Some, again, more confidence than others, but again, that's the nature of the beast here. But we're looking at, we have other criteria that we're trying to focus in on to give us more confidence in the levels that we're trading. So obviously there's some levels that have a little bit more reasons behind it. But again, what we're trying to do here is show you and let you have multiple reasons to trade. And the more reasons that you have against the level, the more confidence you get, and consequently, the more, the problem with traders, or a lot of traders, is that recognition of the trade is one aspect of trading. The second aspect of trading is execution. And some people have a lot of problems executing the trade because their confidence level is not as strong. So what we try to do is we're trying to build confidence in the levels for various reasons. And once we, explain those reasons to you, and you understand, why they would work or why they wouldn't work, and consequently, you get more confidence in trading, and you're able to execute those trades more effectively. So that's what we try to do here. As the market continues to downtick quickly, just shifting down. Next level that we have here is the 36 area. And we're quickly drifting down here to that. That's not nice. Again, different people scaling differently. Everybody's a little bit different in the way they get in. So come back down here to the 36 area. Let me give you some more levels below the 36. We've got 28, 20, 15, and then 3701. So below, we'll have 36 now. Then we have 20, 15, and 3701. And if you look at the chat box area, those are the levels printed out for us as we've swiftly come down in here, right down to our entry point there. Again, we scale into our trades, like I said, or maybe I didn't say, but we do scale into our trades. We top end of our 36 area here at 36 and a half. Again, some of our traders scale in a point above and below. Some of our traders scale in a half a point above and below. We got right down to 36 and a half entry point there, and a nice quick rotation off of that level. If you scaled in a point above and below, if you got into 37, you got your 2 points here. If you got in there at 36, so 36 and a half, you got more than 2 points. So nice little trade there against our 36 area. So nice little bounce there, quick little bounce there. That's what we were kind of looking for. Those are these are the trades that we don't have to work on. Again, if you're looking for, we scale into our levels. So some scale in a point above and below, some scale in a half a point above and below. Either way, you should have been able to get in on this one and make a nice little opportunity, take a little opportunity here. Again, could you have told, is there a way, the question is, could I have gotten short anywhere? And again, based on what we're trying to do, we try to let the market give us indications of what we're trying to do. One of our traders traded off of the pivot and got short right in the morning because he had an idea or a feeling, whatever you want to call it, in regards to what the market was going to do. And he got short off the morning and just rode this down. That's really the only place I could have said if to get short up there. As far as the technical, what we try to do here is we're trying to find levels where we can get short or levels where we can get long. And the market we're waiting for the market to help us with those opportunities. So the way the market's trading with this one-way trade, it's very difficult to say that the market kind of gave us a reason to get short. So I can't say that technically. And again, what we try to do here is we let the market tell us what to do and find the levels that we believe that the market will help us with our trade. So yeah, there's going to be opportunities there where we can find momentum trades where the market will set it up perfectly for us. Again, could you have gotten short? Probably right up against the opening, which is the only place. Again, would I have known that it was going to go? If I would have known that it was going to break 20 points, I would have told you. I promise I would have told you. And if you would have known that it was going to break 20 points, I hope you would have told me, because I didn't know it was going to break 20 points once we opened up. So again, any retracement right now, the only good levels that we have as far as resistance would be at this moment around the 52 area. So do the levels once they break through become resistance? Well, that's true. That is a possibility that it could. Once we go through a level, again, it all depends on how the level worked, right? And if the level actually did work, and it held, let's say on the downside here, then yes, on the rotation back up to it, then that would become true. But if it kind of just slivered right through, like it's done, we need the price action to kind of tell us that it would be resistance on the rotation back up. Again, we let the market kind of dictate, right, what we're looking at. So there are times when, yes, that would be exactly true, that previous support would become resistance. And then there are times where that's not necessarily true. And right now, just because of that early morning bar, that's not necessarily the case. So right now, I would have resistance around 51 area. So that's where we're at there. Footprints. I don't know what footprints are, but what I do look at is the volume that's actually traded at specific prices. I use that along with the Bollinger Bands and the technical analysis to read the price action. So never heard of footprints, but everybody's got different terminologies for different things. So I like that word though, footprints. I use the volume that's traded at each particular level to help me with finding those value areas. And the markets do create value based on the volatility and based on price action. When you get a large influx of volume traded at a specific price, it becomes more of a level that I am more interested in. This is good. I'm glad got a whole bunch of new traders asking good questions. I hope I'm giving you some good answers. If not, just going to ask me again. Oh, there you go. So, like I said, I thought it was a volume. I never heard it called. Footprints, but okay. I kind of answered your question, not knowing what footprints meant, but it's volume traded at each price. So everybody's got different terminologies, right? I mean, sometimes maybe I'm just old school. I do like the volatility here today. I have to admit. And again, it's okay that we kind of ran through a couple of our levels, right? You could see down here at the 43 and then the 36. The 36 was beautiful. Hopefully you were able to take a little bit. You should have been able to take more than 2 points on that trade easily. The market never took any heat on it. That's the low. And consequently, you could have snuck a little bit more than a couple points. So if you kept your stops relatively tight there on the top because of the volatility early on, then took advantage of this 43 area, and here again for sure the 36. The very least you should be is even on a day, and hopefully again just if you stick to your stops and maybe kind of listening to what we were saying about getting out a little bit sooner. You did. I think hopefully you did okay. Again, you like the volatility. I know we were getting run over in the first couple levels, but you got to stick with it. You have to remember that we all of a sudden came back from the last 2 weeks of having hardly any trade, right? And I again, we were warning you about how slow it's been, but we're going to get volatility back, and you should be ready for some more volatility once the market opens back up. And sure enough, it's a new year, and all the traders are back. They're all eager to trade. Everybody's gung ho. They haven't traded in a few weeks. They're ready to attack the market, and that's what happens. You get some volatility early on, and you can see with the price movement here that we're getting some bounces back and forth here. So it's kind of good to see, and kind of again stay focused and don't let the first couple trades get you down or upset, because you're going to get opportunities along the way to give you chances. All right, so we got down here to 36. So again, below that we've got 28, 20, 15, and then 37.01. That would be a complete washout today if we get down there. If you look at the chat box area, there's the levels typed out for us. Thank you, Mark. And that way you kind of got them. Again, now rotation is back. The levels are, somebody asked a question about those old resistance support levels become resistance. It's not necessarily the case. It all depends on the price action. And right now, the good resistance would be around the 50 to 51 area. All right. So, again, Is there better? Is there other? You can somebody see other resistance areas? Absolutely. I could give you some other levels there, but I'm taking the more safer route and saying that we can wait up here till the well, I think that at 50-51 would be a good level. Um, do you risk reward? Again, that all depends on the volatility, right? And I would say how somebody trades. Okay, so not everybody's going to be trading the same, and not everybody trades multiple contracts, right? So if you trade multiple contracts, it gives you the ability to scale out of the opportunities, and sometimes that 2-to-1 ratio, like you say, could be 3-to-1 or even 4-to-1, depending on how you scale out. So we keep the stops kind of tight, and then sometimes we are even up 1-to-1, and other times we get 2-to-1, and if we get in a nice entry point like down here at the 36 area earlier, you get a little bit more than that if you have trading multiple contracts. So we went all the way up to the 42 and change area. So yes and no on that question. Do you use a 2-to-1 risk reward ratio? But not always the case. All dependent on volatility and also how you enter your trades and how you get out. So the levels that we give out are good the whole day, right? There's some extreme levels as the market is really under a lot of pressure here. 28 next level of support. The further away the levels are, they become, you can use those overnight. But again, an overnight trade, it's the total different ballgame, right? You got to remember that. It is more volatile, less of volume, moves around. Some news comes out, you got to run over. So my feeling about overnight trade is that if there's news that comes out and the volatility is there, you're going to trade that news once the market opens up in the morning. So save your bullets for the morning. How's that? That's about all I can say about overnight trading. Unless you're, really got nothing else to do and have to trade overnight. But I like sleep, and I don't like to worry about having a position on. If I had a position on, I'd probably be watching it all the time. And you can't scalp it overnight. It's almost impossible to scalp a trade overnight. So you got to put your 10-point stop somewhere in there. So I don't know. I like sleep. Sleep is good for you. All right, again, market here is under a little bit of pressure. You can see the bond market's finally reacting to the push here to the downside. Goes from the highs or the lows back up here to middle of the range, almost to the highs here. Definitely in the middle range in the 10-year. And so bonds are kind of reacting to S&Ps, not the other way around. So bonds are not really helping us as far as S&P trades are concerned right now. So next level on the downside, we have the support is 28 area. Again, I welcome the questions. Very good questions here this morning. Thanks for asking. Or if anybody wants to know anything to how we do things or what we're doing, please go ahead. We like this little trading room here. Kind of keeps everybody kind of focused in on what we're trying to do, and basically a little bit of back and forth with good traders. And when I was trading up in my office after I left the floor there, it was very boring, and I kind of just started this trading room to kind of keep throw the monotony off there a little bit, because I can only watch these numbers flicker back and forth for so long. And here it gives you an opportunity to throw some ideas off at me, even joke around with me a little bit when things are a little bit slowed down. So it's kind of keep everybody cool. Is the floor still closed? There are, yes, the long and short of it, yes, there are some. Um, I think they tried to get something going in one of the pits, but not not really in full scale. I mean, it's kind of hard to really think about it. To sit there and start trading right next to somebody, and who knows if they have it or not, or you can't help but yell and scream, and there's a whole bunch of who knows. It's a very tough situation to start trading right now. So let's just. I mean, I think everybody's been okay with trading on off the floor, but I would love it if we can get back at some point. But we'll see what happens. Would the bond market affect keeping it out of a trade or setup? Um, hmm, probably not. Maybe, what I use the bond market for. Sometimes it leads, and sometimes it trails. It's not. It's lagging. It's kind of following the S&Ps, but sometimes the bond market actually kind of leads, and it maybe gives us a little bit of a hint as to us trading or getting into a trade. All right, gives again, what I'm trying to do here is give you multiple reasons to feel confidence in entering your trade. So sometimes we use the bond market to kind of help us with that confidence factor. Right now, it's not doing so. It's just a reaction to S&Ps here going down. Again, usually there's inverse trade going down, going between bonds and equities. So that's why it seems like bonds are rallying a little bit in the face of this little push to the downside here in the S&Ps. Sometimes, though, again, you get bonds do react first to news, and somehow they get the news first, and maybe that'll help us. But right now, it's not. It's kind of more reactionary to the S&Ps kind of going down. So I trade in the bond market. I love the bond market. It's where I started trading on the floor of the exchange, and I kind of have a little love for them. Except, unfortunately, they don't trade technically good anymore. They used to. We kind of once in 2007 with the 2008 with all those MBSs and how the Fed is, quantitative easing and everything like that. And again, it still continues. Bond market isn't really the bond market anymore. It's more of a Fed market. So we stay out of that market. But sometimes, you never know. Sometimes it gets news first, and it kind of gives us an opportunity to trade. All right there, Steve. Good trade. Good start to the year for you. All right, market is again. You can see here by that bar in the hourly, we haven't had a move like that in probably a week going back, right? Yeah, 30 to 25 point move in an hour there. So there's a nice little trade there. And if somebody could have told me we were going to break 25 points, I would have been right on there, and I would have told you. I would have had I needed to have a good reason why it broke and an entry point someplace. But again, the only reason we could have traded this morning and being short was against our pivot. And you needed to probably say, okay, I think the market might be going down, but it's not what we like to do. We like to wait for the market to kind of indicate it for us. And price action wise, there was nothing on there that really gave us a reason more than more than our Bollinger Band. If that was the reasons you were looking at, you could have used that to say, okay, again, you need reasons to trade. All right. So if you use that as a reason, I could say, yeah, okay, that'd be kind of cool. Yeah, the levels were not the top levels were not good, the first couple, but then the 43 and the 36 worked out okay. Yeah. All right, we continued the downtick here. Amazing, right? Who knew? Market's not happy. Let's see if we can. Let's see what we can do here. What's in the cards for 2021? Following one of the craziest years in recent memory, and one that almost nobody could have foreseen. Investors are sketching their market predictions for 2021. Recovery, rotations, reset are some of the words being tossed around by analysts and investment firms, but only time will tell if the forecasts hold true. Other themes: will COVID herd immunity be achieved? What about the economic policies in the incoming Biden administration, fiscal and monetary policy? Will labor markets return to what it was once? Corporate earnings? What will happen in U.S.-China trade? Will crypto go mainstream? Electric vehicles and space exploration, IPOs? That's exhausting to think all those things are involved in next year. Oh my God. We take one day at a time around here, right? Keeps us sane. Too much stuff there for us to try to comprehend as we swiftly come down here trying to come down here to 28. See what happens there. All right, so a lot of speculations going on there in regards to what might happen next year. Stock market is positioned for further gains in 21 based on the twin pillars of coordinated fiscal and monetary policy from the U.S. Treasury and the Federal Reserve, and a successful COVID vaccine rollout, said some analysts. He's wrong right now, but don't tell him. However, we envision some bumps in the road. Those bumps aren't coming this morning. With traders awaiting the opening of the bell for 2021, the stock indexes are ahead a little bit. And Wall Street is also keeping the eye on Georgia Senate runoff election tomorrow, which will decide control of the chamber and the fate of the incoming Biden administration's economic policy. Over the weekend, President Trump pressured Georgia's top election official to find in quotes enough votes to overturn his defeat in the state, while Nancy Pelosi was reelected as the House Speaker. Big moves for Bitcoin. They're up to over 34,000. It's amazing, right? Amazing. Yeah, who knew, right? Bitcoin was in the cellar for 2 years. Then all of a sudden, I don't know how they do it, but all of a sudden they decide to buy it. They forgot to tell us. I can't understand how they always forget to tell us. Yeah, we swiftly come down here to the 28 area. Trying to work the 28 area here a little bit. All right, nice little quick rotation there off of our entry point there, again at 28.5. Again, we talked about scaling in, so again, another nice trade there, and you're taking a little bit more. If you're scaling out here, good 3 points. At least we're getting the opportunity to. So again, it's just a matter of being patient, right? Getting in, getting out when it was wrong, and now we get a nice little bump here off of the 28 area. Very nice, quick bounce off of that level, giving us at least 3-4 points if you held on. And so again, this is how you take a little bit more than 2 points off of your trades. Again, so last couple trades, totally riskless. You saw what happens in the first couple levels above where they kind of ran through, but then again, we come back down here. It's just a matter of being patient and kind of letting the market kind of do its thing, and then getting in here and trading when the market. You got to be able to have bullets left when you're trading older levels, because you can never. That's why we always talk about making sure you get out of your trades, right? We don't love any trade that we get on, and that way when you're given these opportunities here, the last two where you're taking no risk whatsoever, and you're able to sneak a little bit more out of those trades than 2 points, and to kind of makes up for some of the other stuff that we got ourselves into. All right, so nice little trade there again. Patience is important, and not giving up on the opportunities and staying focused. Today we had to work a little bit in the morning. Oh, I said bullets. That's funny. All right. All right. So nice little trade there. Again, if you did get in, and if you're trying to stay long, you could try to do that. But I would suggest taking some profits here. You never know when one of these levels will be the low of the day or not, or high of the day, depending on how you're trading. And again, have a trailing stop if you're going to try to stay long. And that way you guarantee a little bit of profit or even a bigger profit, depending on if we do take off and go one way or the other. All right, let's see. So obviously the level worked, so we're not using that level anymore. The next level on the downside we have is 20. Right now, resistance would still be around the 50 to 51 area. Unfortunately, there's nothing really. I mean, you could use 42. And if you get out at 45, 44 above, I get up to the 50, 51 area. So if you're looking for a little tighter entry point on a short, maybe the 42 area. But again, nice rotation there off of our 28 area. And again, just being patient and waiting for the opportunities. Very important. All right. Talked about it all day. We had to work out of some of our other levels above. But we talked you through them, and now you like these levels here where you don't have to think, right? I know. I wish they were all this easy. They're not. This is futures trading. It's not always that easy. All right. So nice little pop up there off of 28. And again, right now it would be resistance around the 42 area. Anything above 44 out of any shorts. And really, that's a bit this. I mean, you could find other entry points, but right now, for time being, that would be it. Let's see, China said it will take the necessary measures to resolutely safeguard the legitimate rights and interests of Chinese enterprises after the New York Stock Exchange started the process of delisting China's telecom giants to comply with U.S. executive order issued in November. Among those facing the listing from the New York Stock Exchange are China Mobile, China Telecom, and China Unicom Hong Kong, which will be suspended from trading between January 7th and 11th. The executive order also resulted in a series of companies being removed from the indices compiled by the MSCI and S&P Dow Jones and the FTSE Russell, marking the latest escalation in tensions between the United States and China. President Trump further signed a law last month that would kick Chinese companies off American exchanges if they have failed to comply with the U.S. accounting oversight board's audits for 3 years in a row. No, I go long. Did you go long again? No, I'm not going to go long again. It just uses the levels the first time. So the fact that we got down to 28 and a half there, it was, again, all depending on how you get in. Some scaling a point above and below, some Scaling a half a point. And if you're scaling a half a point there, and I'm not using it on the rotation back down. Not in this instance. There are other times where maybe I could say there are. You could, but not in this instance right now. Levels, the levels, if somebody can bring them back up there for us. There they are in the chat. Those are the levels we gave out when the market opened up. Busy morning this morning. It's very nice. Look, that's making up for all of last couple weeks, right? That's all I can say. All right, so again, a little bit of pressure on the market. I don't know if it's like buying everything that's happening around us. Again, the low volume last week kind of kept the market up on their own. Today, more volume comes in there, and all of a sudden, we get a little bit more selling. So we'll see. We'll see who's going to be right or wrong, right? Could COVID vaccine passports be issued in the United States? Anything is on the table. Anything is possible, of course. Dr. Fauci, director of the National Institute of Allergies and Infection Diseases, told Newsweek, I'm not sure if it's the COVID vaccine going to be mandatory from a central government standpoint, like the federal government mandates, but there are going to be individual institutions that are going that I'm sure are going to mandate it, like companies, hospitals, and schools. Looking abroad, Israel's planned to launch a pilot of its Green Passport program on January 5th to residents who have received the vaccine or those who have recovered from the illness with antibodies. The passport will lift some restrictions, including mandatory quarantine following exposure to an infected person or traveling abroad, and may even be used for visiting malls and attending cultural and sporting events. While legal issues of the passport are still being debated, the country is leading the world in the COVID vaccinations per capita. All right, so market is coming back down here a little bit. Again, we used the 28 already, so we're not, and we got triggered initially. And if you're going to use it the second time or third time, it becomes a lot more risky. Maybe you can use it a second time, again, depending on the situation. It's a little bit more risky right now than it was the first time to it. And so we like those first time rotations off of them to give us the opportunity that we're looking for. As you can see how that worked out initially. Now it becomes a little bit more tenuous. I'm not saying it's not going to hold. I'm just saying it's a little bit more risky. Everybody's a little bit different here. Everybody trades a little bit differently. So some traders, there's nothing wrong with taking the level a second time to it because some people like confirmation. I trade a little bit differently, but it doesn't mean the person who's looking for confirmation is wrong. It's just the way he trades. So he or she trades. So again, when people ask me, "Oh, what's your record? How do you, how do you have a position? What positions do you have, and it's impossible to give you because some traders did not have the 28 and a half like I did. Maybe they just had it at 28 and got down to 28 and a quarter. Does that mean that they were wrong and I was right? No. Doesn't mean anything. It just means they didn't get filled and I did. Did that mean that my record is better than theirs? I don't know. It depends how you look at it. But when somebody asks me, "Oh, what's your, profit to loss ratio?" I mean, it all depends on the individual trader. Been around this business too long. I can tell you, I've stood around too many great traders who I can never do what they do, and they can never do what I do, and it's fine. But it doesn't mean that they're wrong and I'm right, or I'm right and they're wrong, whatever, So that's my theory behind that, just in case everybody wants to know. All right, again, we're looking at the next level down below is the 20 area. Sidar, nice to have you back. I love it when you give me your comments. Missed you. Hey, doesn't happen often, so take it as you can get it. All right. So there are a couple Fed speaks at 11:15, and then later on tonight. So a couple people are going to be talking later. No problem. All right. Very busy morning for us, right? Very nice to see that we got some volatility back in the market and market moving around, giving us opportunity, some good, some bad. But you know what? As they say, you got to take the good with the bad, or is that the bad with the good? I don't know. Okay, I see it that way, but okay. All right. Well, there's the confirmation that you were looking for, right? Against the 28 level. If that's what you're kind of looking for confirmation. Again, I got no problem with, you could take the levels that we give and you can use your own indicators or things that you look at, combine the two and gives you more confidence to trade, right? That's what we're trying to do here is give you confidence to trade. Yes, it did hold at 28. Yeah, I mean, again, we're not looking, people say cautious bottom fishing. I wasn't trying to, I'm not trying to find the bottom. I'm getting out when I'm wrong. I'm not loving any trade I put on. So, and I'm not trying to hold it for 20 points. I'm scaling out in and out. That's what we do. So, when people say it's a little bit dangerous, yeah, I get it. But beginning again, I know, I know where my stops are. I see, even earlier on when those levels weren't working, I was suggesting we get out of them for less than 2 points. So again, I'm not. Yeah, I understand that concept. There you go. All right. Whatever makes you more comfortable in trading, that's what is important. And that's the most important thing is that you feel confidence in your trades that you put on. You could use some of our stuff, use your stuff together. I mean, we've got a lot of very experienced traders here with us that are trading, and they take our levels or maybe my commentary, some of it useful, some of it they put the mute button on, and they use it to kind of trade. Again, how many contracts they use to trade? Everybody's different. It all depends on your account balance, right? I was standing next to a guy. Yeah, I was standing next to a guy. It was actually my booth, and he had somebody in the S&P bid, right? and he would had a headphone on, and he would be literally trading 400 or 500 contracts at a time, literally. I mean, listening to him, okay, sell 200, sell 100, sell whatever. I mean, he's doing that, verbally, and I could hear him. Doesn't mean that everybody do the same thing. And how big of an account do you need? Those are all questions that, you know, that are out there. He was not trying to take points out of him. He was trying to take ticks, 2-3 ticks, right? That's all he was trying to do. Now, the markets are moving around so much, it's almost impossible to do. Now, you got to remember, this was when the markets were a little bit tighter, right? You could put the markets at one point, instead of having like 100 lots up and down the ladder ticket here like we have right now, they had 4, 5, 6, 1,000 up and down the ladder ticket. The markets were tight. They weren't moving around. I mean, when we got, you got to remember, you guys, everybody here is in the last 10 years, 50, I'd say, yeah, the last 10, ever since 07, 08, maybe 12 years now. It's getting longer and longer every year. Anyway, markets did not were not ever so volatile. Okay, you had a 10 to 15 point S&P move in a day. That was a big day. That was a big day. 20 points, 30 points was huge, right? One day I remember I was trading, and it was in the midst of all this, Goldman Sachs and all the all that. What do you call it? That MBS stuff, and who was that firm that went under? I forget. I want to say Smith Barney, but it wasn't Smith Barney. Lehman's, right? When they went under, that was like, that night. I remember S&Ps were down. What was it, down about 70 points? That was huge, right? Huge. And I remember one night when my friend we were talking, he was trading, and the S&Ps were down 40 points. That was like the biggest move you've ever seen, right? 40 points. And you're getting that. So we didn't have this volatility. This volatility, has increased here because of electronic trading, because of the heights, 3752 or 3700 in the S&P handle. That also adds to volatility. So a lot of things here add to volatility. But when you used to get like 30, 40 point, 20 point, 30 point moves in a day, that was huge. Now we're getting that. Look what's happening today. We're getting that in the first hour, right? You didn't get this crazy volatility like we have now. So, well, these guys would be trading 200-300 lots. They were trading it to scalp it for like 2-3 ticks. A tick is between 24 and then 24 and a quarter. And so each tick is, if you knew that the volatility was going to be so great, you would have probably, they would have made these markets a little bit looser, but they're not. They're very, tight there, by quarter points, right? Yeah, but they used to trade for scalp for quarter points, 50 point, 50, half a point. You trade 100 lots at a half a point. That's a nice. You're getting 50 points on a 100 lot, right? Obviously, you're taking a risk, but the markets weren't moving as crazy, so you could put on 1,000 or 1,500 contracts without getting blown out of the water. You can't do that anymore. I remember we used to get 10-point S&P moves in a day. It was a lot. 15, 20 points. Ooh, you're busy that whole day. It was tighter. I used to give like ranges, 4 points, 3 points. We never got filled all day. But hey, definitely you have to keep adjusting, right? That's what happens. So yeah, they don't trade like that anymore, only because you don't have to. If somebody's scaling in, they're scaling in like 20 contracts at a time for about 10 points. And then they're hoping for I'll bounce back up. And if you're wrong, okay, they get out and do it again. So yeah, it's markets have definitely evolved here over the last 10, 15 years to some craziness. All right, next level on the downside we have is 20. We're trying to get down there. 20, 15, and then 3701. Gonna have to go back to the archives here to find out what's. Look at that! Look at that move. Yeah, we are going to cover the whole week's move in one day. Last 2 weeks move in one day. But it is what it is. What are you gonna do? Now, again, the market is kind of, always thinks 6 months ahead, so we don't know what it's thinking. We don't know if it's the election coming up or COVID, election in Virginia, not Virginia, Georgia, or COVID, or Trump with being Trump. Who knows? So there's a lot of uncertainty in the market right now. Maybe that's adding to the push here to the downside. You got the election tomorrow, and then the confirmation in Congress, which should be a routine thing, but seems to be that it's not going to be. So that's going to become a problem until we get past that. Then we're going to have the COVID numbers. Vaccines are not going out fast enough. You throw in a whole bunch. I could throw you a whole bunch of negatives, but doesn't mean that I'm right or that I know anything. I'm just blurting out some negatives in the market. Could that be a reason that market's like drifting down here like this today? I don't know. These analysts will tell you, yeah, they'll pick one thing and say, oh yeah, this is what happened. They don't know. You too there, Sal. Thanks for joining us. All right. All right, we're coming down here slowly. Looking down here at the 20 area, the next support level. Whew. This is the first time I got a break to stop talking. Talking a lot this morning. All right, coming down here. What did I do on New Year's Eve? Well, my wife stayed up till 11:30 and then said, well, it's 12 o'clock in New York. And then she went up to bed. So that was the extent of my New Year's Eve party. No, there's no New Year's Eve party around here, I tell you. But hopefully everybody stayed safe. We got to get past this little period here until they start divvying out those vaccines to more and more people. All right, got down there to the 22 area and bounced up here a little. Volatility to the downside is lessened here a little. So again, that's a big move here over the last uh, since we started. Again, anybody have any questions? Feel free to ask. Make sure you put them in the chat box area as I have that window up, and I'll see it quicker. If you could reprint the levels one more time for me. If you look at the chat box area, the levels are going to be up there. There they are. Those are the levels we use since the morning. And you can see here we've went through a few of them on the downside. Had to work through the first couple. And then where the other levels worked very nicely for us. All right, market just does not like it. What's going on here? And again, just be patient, wait for the opportunities, our levels. We gave you some levels to get short out in the upside. They never got up to them. Well, right now, we're looking at the 42 area as we quickly come down here to the 20 and go through it. Again, something was up there, right? Obviously, right now with this increased volatility, I almost have to say that we have to increase our stops just a little bit. But again, the quicker we go down to, well, good. You know, you're definitely adding more volatility at some point. You might have to just increase your stops or increase your scaling in the area instead of a point. Maybe make it 2 points. Seems like we're finding those markets are moving around a little bit as it continues to go down. There's more momentum here to the downside, so be a little bit careful there on the 15 area. Again, popping back up here, and definitely have a tight stop on the 15 because I think we go below 13, they might open up the floodgates down to the 3701 area. Who would have thunk this was going to happen today? Like I said, if I only knew, I would have told you, I promise. Again, on the downside here, below, you got to make sure you keep your stop in there, tight stop below um, 12 for sure. It looks like it could open up the downside to more downside trade. But that's okay. Again, we're just taking advantage of ebbs and flows, whatever the market gives us or not. Sometimes you have to work a level, and that's fine too. Not surprising. We're just not getting any rotation. Everybody was used to the last couple of weeks of trading, and that's not happening anymore as the volatility here. This is what happens when people come back to trade, right? That's why the last couple of weeks were not indicative of true market movement. I'm not really surprised. It's just it is what it is, and consequently, it's going to find a level that it will settle in on. And again, there's a lot of reasons that are out there that reasons the market was trying to stay strong. With a lot of reasons that the market was also had reasons to be weak, right? So right now the bears are winning on that argument. That's all. Again, be a little bit careful here. Below 13, it could open up the floodgates a lot lower. And that's why we have 01 is the next really good level. Could be where it stops a little bit there, Mark. All right, we're coming down here, take you into the 15 area. Be a little bit careful. Like I said, keep your stop in there. All right, again, we was a little bit nervous against that 15 because for the way the market was kind of setting up there. Next, really, I did not. 15 was just the last resort type of thing. Looking really to go down to the 01 area. Not that I would get short there, but I'm just saying, or here. A good short right now would be around 25. Again, we said keep a tight stop there, and hopefully you're listening or not taking it at all. That was the other alternative, right? Okay, again, we talked about a little bit of maybe a little bit of a momentum trade there below that 12, 13 area, only because of the way it kind of set up previous. And that's why I said let's keep a tight stop there against 15. Maybe you got short there against it as well. Could have maybe taken that route. Okay, not surprising that this is happening. All right, they did open up the floodgates here down to, I don't think they would go this fast, but it's going fast. All right. Definitely volatility is back in the market. No, that's not the only reason. There's a lot of internal issues here that are not good. Internal issues in the United States, I'm talking about. It cannot be the vaccine. It's not working. That's, first of all, not enough people have gotten it to even make that determination, right? So that's, you know, that maybe that's the problem, that it's not going out fast enough. So that's one thing, but there's many internal issues going on in the United States that's keeping this market heavy. And again, once the traders came back, you're trying to eliminate or sift through the information that was there prior, which was basically they were only trading on the fact that if we got the stimulus passed, everything would be hunky-dory. And remember, I did say when we were trading a couple weeks ago that you were looking at the kind of buy the rumor, sell the fact type of situation, where you were buying the fact that they were going to, have a stimulus, and they got it passed this, over the weekend and signed. The president didn't sign it right away, then he did, and then so you get in this reaction here where you're basically saying, all right, well, what else was the market kind of holding its hat on? Still the internals are bad. The numbers are still terrible. They're not getting any better right away. So, that has an effect at some point. What kind of, recovery are we going to see? Again, and there's stuff in the United States in regards to this election coming up tomorrow. The president's lack of acknowledging the fact that he lost, and still trying to get some people on his side to say that he won. And it's creating uncertainty, and markets don't like uncertainty. So maybe until that's resolved too. But we haven't had again, not surprising that you can see what's happened here, that the market basically is retraced last 2 weeks in 2 hours. That happens all the time too, by the way. Just in case you were wondering, that never happens. It does happen. So below 3701, 3695, 89, 80, and 74. And 74, right. So these are the levels of support on the downside here. Below 3701, we got 3695, 89, 80, and 74. All right, we got down to 02 there-ish area. We were looking at 01, so be a little bit careful here. You can see here with the added volatility, you almost have to increase your stop there a little bit to take into account the added moves here. Obviously, if you're going to increase your stops, you're going to have to increase your profit targets as well. All right, there they are. There are the levels printed out for us, with the levels below here: 36.95, 89, 80, and 74 on the downside. Again, if you would have told me we were going to break 40 points this morning, kind of pissed that you didn't tell me. I would have shared it with everybody. And I keep saying this all the time, if I only had tomorrow's paper today one time, we'd all be not trading anymore. We'd all be happy, retired someplace. Well, at least for a month. All right, seems to have got a little bit of a footing down there. Let's not get carried away with footing. It's very loose, uphill, steep, muddy footing. Could easily slip down some more, but it seems for the time being it kind of held. We got what did I say? I got 01. I got down to 275. So that's kind of close, but no cigars for us. Now you got to be careful there with the 01, given where it stopped and how this market is volatile. So be a little bit careful there around the 01. I would probably look at the 36.95 as the next good support level, especially. But if you did get short there, I said you got to keep your stop there really tight against 15. Maybe it was a possibility of wanting to get short against the 12, 13 area. And that's another way that you can take what I say and use it in a different way. All right, market continues the downtick here. Be a little bit careful, like I said. Okay, nice quick little scalp there if you were using it, if you did take it. Again, it all depends on risk tolerance and how much risk somebody wants to take. You have to keep your stop in there if you did take it, and you get a nice little quick rotation there off of it. Especially if you got in at the lower end there. All right. It's a little sticky stuff going on here, but at least it's you know, it is giving us some good rotations. We cannot complain. All right. That volatility has quickly increased here, quickly. Which makes sense because the more you go down, the quicker and more volatility comes into the market. So I got to keep the tight little stops in there. Nice trade there, Steve. Take it easy, Steve. Nice trade. Nice day for you. All right. Again, we tried to get you short there against the 12 area based on what I said, hopefully. And if not, you're obviously came all the way quickly down here to 95, almost down here to the 89 area. It is moving around very quickly, so you have to deal with the volatility, right? And the volatility is there. So obviously trade a lot less. You don't have to trade a lot now with the added volatility all of a sudden. As definitely the floodgates have opened up here. Again, not surprising considering all of a sudden we've expanded our stops and everything. Definitely staying on our toes. And here's a day where we actually get more than 5 trades in the course of a day, right? Yeah, everybody's asking me about trading. Well, here we go. We're trading today. All right, come down here to our 89 area. And a nice quick pop off of that. And you got to stay focused here, right? Got to stay focused, get in, get out. Market is moving around that fast. And if it's too fast for you, just relax. We'll just be patient. You'll get other opportunities. No worry. All right. Good job there, Robert. Wow. This is complete washout here, right? Market does not like what's going on. anywhere. Next level down is 80. Let me give you a couple more here. 80, then 74, 65, 55, 46, and 39. All right. Woo, nuts. So below 74, we got 65, 55, 46, and 39. And thanks, Mark. They're already up in the chat box area as their levels have been giving us some good rotations. But you have to trade smaller and expand your stops just a little bit given the volatility here. We started at 2 points. Now we're up to 4 points, maybe 4 or 5 points with the same amount of profit potential targets that we're looking for. I am making you work today. I'm working today too. You knew that getting short there at 13 would be so good. And so fast. All right. So 80 is the next support level. And we gave you some of the levels below that. And hopefully, again, you're got to be quick today with what's going on. Stay focused. Don't get flustered. If you take your loss, you have plenty of ample opportunity to make back your money, or go ahead, and if you're up money, be good. Don't let the volatility get to you. Just stay focused. As definitely the floodgates have opened up here. Is once you got through that 13 area above, it's been kind of, that was like the last level of support there where you could have gotten short. And like I said, you don't want to be long. That was that last 15 area, which I didn't put it in there, but I told you to keep that tight stop. So almost to the point where you could have gotten short. Again, we're only doing what the market tells us. Unfortunately, sometimes it's a little bit more clear. Sometimes it's open up the floodgates like it is today. But either way, you're staying focused and getting in, getting out, keeping you in the game. Normally, we're looking for about 5 trades in the course of a day, right? Obviously, today we've gotten a lot more. That's a lot. 5 trades in the course of a day is a lot. But on average, today we're making up for the last couple of weeks where we didn't have that many opportunities to trade. All right, sir, there. Hopefully you make that up there. Very nice day there, Mark. Good job. Yeah, you don't have to be right more back to back. Nice. You don't have to be right too many times, right? With these markets doing what they're doing, and you got a nice rotation here for you. Very nice. All right. Lovely. I said very nice. It's not good enough. You have to put the word lovely in there. Speaking of being romantic. All right. Market did bounce. So I'm trying to bounce here off of the, well, we got down to, yeah, what is that? Down there at 81 area, we had 80. So obviously the 80 is a little bit tenuous, given that we went down to 81. So we gave you levels below. We got 74, 65, 55, 46, and 39. Right. Very busy morning this morning. We had plenty of opportunities there. Hopefully you were able to kind of trade with us. Again, we got run over there a little bit early on, but then we had many good opportunities along the way after that. The volatility here has continued to probably stay. It's not going to go anywhere today. It looks like, definitely market has, gotten a lot to trade, about things to think about, and it's going to keep us at least for today kind of busy, kind of making up for the last couple of weeks where we've been dead to anything, right? I mean, this market's made up trading over the last almost 2 weeks now for sure, and if we keep going down, it's 3 weeks. Pretty amazing. No, there's no really good downside reason except for the fact that there's more sellers than buyers. Always my favorite line, right? No, but the reality of it is that again, the lack of volatility over the last couple weeks. And I've said this when we were trading. Unfortunately, you weren't around. But I said some people, have the ability, because of the light volatility, can just um, manipulate the market one way or the other, because there's not that much volume, per day. And it's a lot harder to do when more traders come in, starts moving the market. So, that's, you would have maybe 500,000 traded in the whole day. And we've got already, almost 900 now, and it's just about 10-20. So, yeah, so there's a difference. It's harder to manipulate the market, keep the market on a one-way path, but it is what it is. So, I'm not saying that people manipulate the markets. I think it's easier to do that when there's light volume. All right, seems like we kind of held there where we're looking for 80. Unfortunately, we only got down to 81 and change. And that would have been a nice little, cherry on top of the cake there if we did get that. But then again, we can't ask for everything. And we finally got this quick, it's the biggest rotation we've had the last couple hours. Seems like it wants to hold. And maybe uptick right now. We got resistance up around the 25 area. And anybody have any questions, please feel free to write them down in the chat box area. I've been trying to kind of explain what was going on all day today as the markets were really moving around. All right, things have definitely slowed down just a little. Still moving. I'm not saying it's slowed down a lot. I'm just saying just a little bit. Had a little bit of trouble getting there above the even area there. I would say if we get above 01, we could rally a little bit, maybe up to 10. We'll see if that happens, but definitely out of any shorts if we get above 01, or maybe if you're looking to get long, maybe a little bit of a pop there above 01. I don't know. We'll see. Downside, be a little bit careful there around the 80. We'll probably look at the 74 here as the next support level. Resistance right now would probably be around the I'd say some good resistance would be around the 25 area. And well, keep your stop in there if you do get short, whatever your stops are. Again, right now, price action plays probably have a stop of about 3 points, but the levels you probably need a little bit more. But again, they're probably going to suck out the volatility here in a little bit as the afternoon trade comes into play. Definitely going to be less volatility as the afternoon wears on, I think. That's why we like to focus more on the morning hours to trade. We gear most of our trades for the morning hours. Keeps us, focused, and also I think it gives us good opportunity with the ebbs and flows that the market presents itself with in the morning versus the afternoon or late morning hours. So again, a little bit of a pop there above even. So if you're looking to get short, that's where you have your exit strategy there. Oh my God, what did the Chinese do with them? Jeez. Not good, not good. Yeah. Can we do this tomorrow instead? Uh, because kind of a little bit busy today, if you can imagine. So yeah, let's do it. Let's do our class tomorrow if that's okay with you. And only, actually, no, wait. I got something going on tomorrow. Let's do Wednesday. Is Wednesday okay? Okay, fantastic. Sorry about that. Yeah, who knew it was going to be so busy today, right? So if we can wait till Wednesday, and that'll be probably maybe get some bars painted up some way or the other to explain more things to you. It'll be a little bit easier in this straight path to the downside. But we'll do Wednesday. We might be busy Wednesday too. Who knows? That's okay. We'll do Wednesday either way. How's that? All right, we're turning over here a little bit. Again, getting above even out of any 01, I should say, above out of any shorts. And next level of support would be down at the 74. 80 is a little bit more tenuous. And above 01 could have a little bit of a rally, maybe back up to 10. And the good resistance would be around the 24 area, 24, 25 area. And as the market kind of maybe is going to trade a little range bound here, we will take a little bit of a break this morning. We've been very, very busy. Again, we're looking for 4 to 5 trades. I think we got a lot more than that today. So, and I said, makes up for the last few weeks where we've been kind of twiddling our thumbs a little bit as we wait for the market to kind of give us an opportunity to trade, but not today. Today we got plenty, so that's all right. Like I said, it always balances itself out, Yeah, and also keep in mind that if volatility is too great for you, just be patient and things will settle down a little bit. All right, get back here in a bit.
Hey, Guy, welcome aboard. Quick sound check for you. Hey, Lulu, welcome. Geraldo. Hey, Clyde. Ike. Hopefully, I'm pronouncing that correctly. Hey, Fred, did you get a chance to take care of that? And Guy, can you just give me a quick sound check? Let me know if you hear us. We had some morning here. Oh, that's great. We start here at 9 a.m. We're pretty much done around the noon hour Eastern time. I know the market has been busy, but we had a great morning. We're looking to do 2, 3, 4, 5 trades during the morning session based on a price action fundamental. The trading starts out with setting key proprietary scalping levels and then utilizing those levels as the key areas for trades. We started here at 9 a.m. Eastern time. Right now it's 1:11 p.m. Eastern time. It's very much an organized approach to trading. Wow, okay. Yeah, I think that generally we found that if you, and this, everybody's different, right? You have your way of doing things, and if it's working for you, stick with it. Our opportunity zone is 9 a.m. You know, come in, get everything set up. 9:30, we have the bell. We set our levels right around the opening bell, and then we go through the morning session. We could be done in the first couple minutes. Could take us an hour and a half, 2 hours to be finished for the day. Individuals like the levels, the better levels than they're getting elsewhere that Sol provides, and also the commentary and the interaction around the trades. It's completely up to you. We don't do it that way, but doesn't mean you can't. There's different periods of time around the globe that are good for trading. The window from 9:30 to 11, maybe 12, is the zone that we pick. And we look to do 2, 3, 4, 5 trades. We look to bank the money based on this particular trading technique, which is price action. And it starts out with the proprietary scalping levels. It really depends on what you're looking for. This is about focus, discipline, and making money, and then holding on to that money. And that's really what the opportunity that presents itself is. I did send out to everybody a New Year's discounted opportunity for this room. It's usually $379 a month. It's on for 100. I'll send it out to everybody. If you haven't done it yet, take advantage of it. If you get the 100, you get to keep it. So, Guy, you can look at that. Geraldo, you can look at that. Clyde, Ellie, Elke, excuse me. Fred, I think you already took care of it. Not sure. Let me know. Lulu. We're platform neutral. Doesn't matter what platform you have, as long as you have good order entry. decent, you need speed, good charts, as far as speed. But you can do with just about any charts. I'm hoping so, Fred. Hey, that's great. So I think it's interesting. So if you're starting out and you're new, to get set off on the right foot based on your trading career is what we do here. So the opportunity for you is to get set up with your software, put up an S&P 500 E-mini chart. You can see Sol's charts here have a 5-minute and a 1 hour. Try to duplicate those charts. You could put a 30-year bond chart up. Come in the morning, 9:30ish. Receive an audio Sol's levels. Load them into your software. And then pay very close attention to what happens in and around those levels. Listen to Sol's commentary, ask questions, and really focus as a new trader on doing one thing and doing it well, which is focusing on the S&P 500 E-mini. The technique is price action trading, and see if you're any good at it. You really don't need complex charting systems, complex charts. You really only in in this instance, focusing on trading this instrument and looking to trade it well, this is all you need. You don't need any other distraction except for where the rubber meets the road at the price action level of the trade and whether you can learn how to enter a trade, price, defend the trade, stop, and your exit strategy on that trade. And if you can just do that, you're so far ahead of the game. You have removed all the distraction from the trade. Now, of course, you got to pay attention to when economic numbers come out, and you have to understand when to be in a trade and not be in a trade. You have to learn, when a level is still valid or not. There's a lot that goes on, but having less distraction when it comes to all the noise that people can build into their charts. For what reason, I don't know. It maybe looks interesting. It's fun to talk about, but the bottom line is more often than not, they don't make any money doing it, but they spend a lot of time doing it. So if you're one of those people that want to really focus on trading, then let us know and we'll talk to you privately. First order of business around here is to sign up for Sol's Monthly. Obviously, on your end, you'd prefer to get the discount, I would think. If not, that's okay. I'll send this out to you so you have it. The other thing you should know is that we have an AI or a bot. The bot will identify people that haven't paid And if you've been in for a few days and you haven't paid, it'll just kick you out. So make sure you know, you get put in the penalty box, and I'm not sure you want to do that. It's something that we gave control over to because we understand that $100 based on the deal is really no money at all for people that are trading, and that your opportunity and our opportunity, should align. If anybody wants to talk about Sal's course and his mentoring work, let us know. Be glad to help you with that also. That's you join the monthly, and then if you want to talk about Sal's course and mentoring work where he takes you under his wing and teaches you directly, that's something that is available to you also. So Clyde, let me know what you think about that. Elke, the same. Fred, I know you're on track. Guy, Geraldo, Lulu, just let me know. Hey, Geraldo, did you sign up for his monthly? Based on that link that I sent out to you? Well, that's great. And then we can certainly follow up on the telephone after, and I can give you the rundown on. And he's got some great discounts on the course too. So, I mean, his mentoring work. He did that for New Year's and COVID. And Guy, I think you'd definitely be a candidate. It was always something that is interesting to me is that trading is the direct effort of putting on trades that you understand why you're doing it, and try to get better based on the why. And too often people go off and they do everything else around the act. They try to learn so much or have to feel like they have to really learn how to build a chart and really understand what's going on based on their software and all sorts of stuff. In this instance, what we're doing is we're saying, forget about all the ancillary and, you know, non-important things and concentrate on the money and the understanding of how and why you're entering a price based on a trade, and then how to bracket that, based on your order entry with Sol's levels, and you learn how to make those levels your own. And then where do you place a trade? Price. And why are you placing that trade? Price at that level. And why not at another level? And that's your first step in learning what to do. The action of entering, defending, and exiting your trade. Are you connected on Skype at all? Yeah, so so our Skype name is Market VU, MARKETVU, all one word. I'll type it back to you, or I'll type it in. Everybody can do what you want with it. But, Skype's been around for a while. It's not the best since Microsoft took it over, but it works. Let me know if you got that. That went out to everybody. And Guy, I think you understand what we're talking about, right? Based on focus and not getting caught up in all the machinations of all the different tools that they throw at you. Indicators are lagging. Everything shows you what happened, in some sort of form or another. Hey, Guy, let me just see here. Yeah, I think that you've just got to simplify your charts. Simplify your charts. I would also sign up, and this is me, for Sol's monthly. Get the discount. Just come in while you're simplifying your charts. Harold, I'm going to pick up on you now. So I'm just going to be in the background for a minute. Um, you can also just, if your charts are too complicated or your charting is too complicated, but it looks like you've got a decent setup, just minimize what you're looking at. And look at Sal's chart as an example. And get his levels in the morning and then be set up to do one contract in simulation and practice. Practice like, practice with a mission. And I'll just say this to everybody, trading and simulating and all that stuff is pretty easy because you're not at risk with cash. And there's a lot of slippage that goes on. If you're going to do demo trading, do it with a mission and the concept. So let's say it's price action trading. You write down Sol's levels, you load them into your software, you pay attention to what happens based on price movement around Sol's levels, and you enter trades based on, true methodology. So then you need the discipline of understanding where your stops are, where your entries are, and where your exits are. And that'll go a long way to tighten up um, your learning curve and your results curve. So let me leave you there for now. I'm just going to pop off into Skype for a minute and then, take the moment that I'm gone to make sure you get the deal and we can go through there. I did send it out to everybody, so I think, Gary, Guy, you have it, right? Should be in everybody's chat. Hey, quick shout out to Mahmood. Hey, Mahmood, welcome. Raldo, nice talking to you. Hey, Clyde, I see you back. Elkie, let me know if you're back. Lulu, use the chat feature to respond. And Guy, I think you took care of your thing, right? I just connected to you on Skype too. Hey, quick shout out to Fred. Hey, Fred, thank you. Appreciate it. So let me know if you got my message. I'll try to shout out to you again. But Fred, thank you. Hey, Fred, that's great. Appreciate it. Thank you very much. Happy New Year.